Now, this mortgage rates recently posted the largest weekly drop in the past year. Average 30-year fixed rate down to 6.35%, which is still high, speaking in historically, but it's a nice drop from where it was. Mansion Global host Katrina Campins joins me now. Katrina, the Fed rate cut rates finally after almost a year of not doing anything. Is it enough, though, a quarter-point cut? Is that enough to affect real estate, to affect mortgage rates?
Well, thanks for having me both. Well, I think first and foremost, it's really important to note that the Fed does not directly set mortgage rates. I'm getting so many messages on social media with people asking me, when are my kids going to be able to afford a home? And they're asking questions about the Fed. The Fed does influence, right, the actions, but mortgage rates they follow the Treasury yields, as we know. And so what we're experiencing right now is that the market already expected a reduction. So the past 2 weeks, you actually saw mortgage rates come down. And so many mortgage brokers that I spoke with told me that they were able to get better rates the past 2 weeks than they were these last 2 days. And I think it's because of what he delivered to the American people, right, during the press conference. And so there's a little bit of uncertainty. I do, however, appreciate the fact that there's relief and that we're beginning to see an uptick in mortgage refinancing. And I think depending on what rate you have, now would be a good time to do that. I do think that a lot of buyers are waiting because he clearly said there would be more reductions.
Well, particularly the first-time home buyers. Yes. I mean, young families that still look at a rate over 6% and say, I can't do that. I think a lot of people are waiting, not just until it goes slightly below 6, but maybe until it's into the 4% category. Will we get back to that?
Well, that's the big question, right? I do believe that 5% will motivate a lot more people to get into the market. But another thing that we need to pay close attention to are wages and job growth, right? Because it takes so much more of your income to be able to afford the same home. So something's got to give.
Well, by the way, just to put a fine point on that, twice as much.
Yes.
We're now paying twice as much for the monthly cost, mortgage, the whole bit, than we were in 2019, not too long ago.
And that's why I truly believe that we need more affordable housing, but you need to incentivize builders to be able to build more affordable housing, right? And that's where I think the changes in zoning, on the state and local levels need to occur, and also tax incentives to builders, because they need to be incentivized to be able to build more affordable homes for first-time home buyers. And it really breaks my heart because, for me, it's really part of the American dream. I remember so vividly buying my first home in my early 20s, and I felt just like I had achieved the American dream. And now, first-time home buyers, I mean, the typical age is 38, which is really sad. And then they're putting off family formation. And then you go back to the values of this country, which are faith and family. They need a home.
That's
to be able to raise their family.
Point. Yep, and it is being put off into the future, way into the future. Used to be achievable much early on. Next one, applications to refinance a home loan jumped 58% as interest rates dropped sharply. Is now the time to refinance, or should you wait for a further pullback?
It depends what rate you have, right? Because we still have so many people that have 2 or 3%, God bless them, right? And so they're not going to want to refinance. There's no incentive to do so, or even sell. And so it depends. If you bought at the height of the market, you have a higher rate than is being offered now, then now would be a good time to refinance. You did see a huge uptick, to your point. But I think we're going to continue to see those reductions as, the Fed stated. And so it really depends on what rate you have.
Let's leave on some good news, which is that new home builders are dropping their prices. Why is that, and will that continue?
Well, they're providing more incentives. 20% of the cost to build a new home are regulations and permits. But the builders now are providing more incentives for first-time home buyers a lot of times. And so it makes more sense if there's a lot of supply, for instance, in the Florida market. And so these builders want to get the supply out of their hands so they can continue. And that's why they're offering these incentives. So it depends on the market. Every part of the United States is different. And we're seeing just, the Northeast and the Midwest doesn't have enough supply. And Florida has a lot of supply. And Texas has a lot of supply. And so it really depends on what market you're in. But
final selfish question. What about New York City? With Mamdani, a socialist as mayor, he says he's going to focus on rent control and things that that developers don't like at all? What's going to happen with real estate in New York?
It makes me so sad for New York, truly. Having grown up with parents that fled Cuba during the Castro regime, I just know the effects that this will have on New York City. Developers will leave, and they fund a lot of the city. Infrastructure, schools, everything through taxes. And so I really pray that this doesn't happen, but it's not looking very, very good. And the Florida market is going to explode if this happens.
My wife fled Nicaragua, socialist Nicaragua. She said, at least we had better weather down there in New York. Here we're having the same system and bad weather, according to her standards.
Let's hope that something changes, quickly, or that the younger, generation realizes the effects. I think that they just don't know, and he's such an influencer to them.
Well, people who have parents or spouses who've fled socialist countries know all too well what happens with those policies. Katrina, great to see you.
Thanks for having me.
Thank you for being here.